Okay, so today we're going to look at tax administration and tax planning. You can also refer to our chapter 1 where we talk about the importance of tax planning, especially in various topics that we have done so far. So under this tax administration and tax planning topic, we are going to focus on returns, assessments, as well as appeals. So what are the taxpayers' duties and responsibilities? So number one, you as a taxpayers, we have to keep sufficient records for 7 years. And we also have to furnish reasonably accurate estimate of tax payable for a financial year prior to commencement of business, if you have a business. And for company, you have to file the tax return within 7 months of the financial year end. And whatever shortfall must be paid by the last day of the 7th month from the financial year end. Right, so in Malaysia, we have what we call a self-assessment system. So what a taxpayer must do is to actually file the tax return for salary individual, particularly the tax return must be filed not later than 30th April for each year. And so for sole proprietors, partnership and cooperatives, the tax return must be filed not later than 30th June for each year. And what happens if you fail to submit the returns? We can be fined up to 20,000 ringgit or to imprisonment for a term not exceeding 6 months or both. All right, so the general issue of tax return forms are normally in February or March, except for Form E. So you can see from here we have different forms where we have Form B, this is for individuals. So we have BE for only employment income, and for individual with other types of income, for example, business income, rental income. So they have to fill up Form B. So Form C is for companies, so it's very easy to differentiate. And we have Form B issued to partnerships to report their income. But as you all know, partnership will not be taxed in their name. Each partner is taxed as individual having a business source. So they will have business income rather than a partnership form. And then Form T is for trust, associations, clubs, societies, deceased persons estate, the one that we covered under topic trust, estates and settlement. And Form M, this is for non-resident individuals receiving income derived from Malaysia. And Form E, this is for employers to show the remuneration paid to their employees. All right, so returns by employer, this is what must be done by the employer. So they have their various duties under the Income Tax Act, such as they have to prepare Form E or Form EA or EC. So this is Form E for employers, not later than 31st March in the year immediately following the first mentioned year, containing, so the companies or the employer must report the number of employees employed, number of employees subject to deductions, subject to the scheduler tax deduction, the monthly deduction, and then the number of new employees, the number of employees who have resigned. So every year they have to submit the latest number of active employees they have. They also have to report the number of employees who have actually resigned and left Malaysia. So the usual details in the form, normally the name, the details, and the amount of remuneration or the salary, the benefit in kind paid payable by the employer to each of the employee. Right, notice required for new employee. Okay, so for employer who actually just hired new employees, they have to fill up Form CP22 when they first employ an employee, and within 1 month from the date of commencement of employment. So they have to submit the form to the Director General saying that these are our new employees. What about employee who ceased to employ or who stopped to work in that particular company? So if they are about to cease to employ an employee, they must have a written notice Form CP22A must be submitted stating the full name and address of the employee and the expected date of cessation of employment, not later than 1 month before. So they have to initially mention to the Director General that this employee is about to stop being employed by that particular employer. All right, assessment under Section 90. Right. So as you all know, in Malaysia, we practice what we call SSES, self-assessment system, which means there will be no issuance of a notice from the government or from the lembaga hasil. So we ourselves as a taxpayer, we have to furnish and we have to complete our own returns, our own assessment, and submit to the Director General of IRB. So whatever return that we furnish is deemed to be the notice of assessment. Okay, so prior to year 2000, the lembaga hasil actually issue the tax return for the taxpayer. But after that, we ourselves as a taxpayer, we have to submit our own assessment. And the year of assessment refers to the year in which tax is assessed. For companies, what they normally do is that they have what they call as a monthly tax installment, which means they already deduct their tax based on their business income. Monthly business income already deduct their tax. No installment need to be paid if the estimated liability is less than 600 ringgit for the year, which means they have to wait, they can wait until the end of the business year, then only pay their tax. All right, so to summarize, under returns, assessment, and appeals, so what are the responsibilities as a taxpayer? So for individual who arrived in Malaysia in a calendar year and is chargeable to tax in Malaysia for that particular year or for the following year, they should notify the DG that they will be so chargeable within 2 months of their arrival. Here we are talking about the foreigners who come to work in Malaysia and receive income in Malaysia. All right, so each individual for each year of assessment, which means every year, every individual who has chargeable income for that year shall furnish a tax return in the prescribed form. So remember form B or form BE for business or business employment income only by 30th June of the following year if he carries on business. If there is no business income or derives income from other than other non-business sources, so the due date would be on 30th April of each year. Okay, notify IRB of any change of address. So if we change our address, every person chargeable to tax in Malaysia is required to notify the DG of any change of address made within 3 months of the change. And we have a duty to keep sufficient business records for 7 years. Similar to individual taxpayer, we also have to keep the documents for 7 years after the end of the relevant year. Right, so pay tax on time by installment or monthly tax deduction. Okay, this is particularly for a salaried individual. Normally, the employer can deduct our monthly tax from the salary. Which means for every month, the tax is already deducted based from the salary. And at the end of the year, we can actually compare the tax that we already paid to the tax that we should pay after deducting all the personal relief that you are entitled to. All right, so if we look at employment income, they are actually subject to monthly tax deduction as well. So there is actually a table given by the DG, by the lembaga hasil. So with this range of income or employment income, this is the tax that we have to pay. So we just follow the table and the employer will actually deduct the tax from the monthly salaries. Okay, for companies, LLP and trust, for companies, they have to furnish the tax estimate to the DG not later than 30 days before the beginning of the basis period. And the tax installment must be made by the 15th day of the calendar month. All right, so if you look at number 7, it is important to note that if the tax liability for the relevant year of assessment exceeds the tax estimate, or revised tax estimate by more than 30%, then there will be a 10% penalty levied on the amount in excess of the 30% buffer. which means for this, especially for companies, and they have to do their tax estimation and pay the tax. If the estimation or the tax liability is actually more than 30%, which means there is something wrong with their tax estimation, or they pay less taxes. So they will be penalized. I think the rest you can read, for example, for this new the date of commencement of the business, and when will be the date for the first installment. So this is just the example for installment, and based on the commencement date of the business. All right, furnish information required by IRB. So every person is obliged to provide information called for by the DG within the time stipulated. If the information is not provided within the specified time or extended time, and the information relates wholly or partly to a deduction claim, the DG may disallow such deduction under Section 39, which means whatever information that we provide, we must provide together with the relevant documents. So in the case of death, the notification of the date of death of the taxpayer set a 3-year limit. So you can refer to our estates topic, whereby I already mentioned to you that the DG gives the executor a 3-year period commenced after the end of the year assessment, in which the DG is informed of the death of the individual. So you can look at the example here where we have Mr. AB died on 1st December 2014 and Mr. XY is the executor. So XY notified the DG regarding the death on December 2014, and the DG has 3 years from the end of 2014 until 31st December 2017 to raise any assessment or additional assessment. Okay, so they have 3 years. All right, so what are the responsibilities of employer? Okay, this is sometimes you can see in the news, as some employer, they don't really deduct taxes, they don't really deduct EPF or SOCSO from their employee's salary. But this is actually the responsibility. Number one, to deduct the monthly tax deduction from the remuneration of each of the employees in accordance with the schedule on account of tax. So the one that I mentioned before, there is a table provided by IRB based on the range of the salary and how much monthly deduction must be made to the IRB. Furnish an employee's return by 31st March following the end of the relevant year, containing all of the required information. Prepare annual statement of remuneration and make it available to the employees by end of February, right? Because the employee needs that form to calculate their tax paid. And notify the DG within 1 month before an employee leaving Malaysia for more than 3 months, right? Remember, we are calculating the resident status of an employee. So if they go out overseas for training or you go overseas for holiday, anything more than 90 days must be updated to the IRB. All right, what if the taxpayer did some mistakes ataupun they forgot to furnish their tax return, so there is a right to appeal for the taxpayer. Dengan syarat, number one, the timeliness must be submitted within 30 days of the issue of a notice of an assessment. And it must be in writing, in proper form. And they have form Q for this appeal procedure. And the grounds for making an appeal must be stated. You cannot simply do an appeal without any good reasons for doing that. So this is the appeal procedure flow chart. So you can also look at the flow chart. So whereby we have until the final stage where, for example, the taxpayer appeals within 30 days. And further appeal from the SC are made to the High Court. SC is Special Commissioner of Income Tax. So this is the procedure for appeal, the flow chart. And what about appeals for error or mistake? If, let's say, a taxpayer make a mistake in the return or in the assessment or in the statement, and they have to apply in writing to the DG, fill up the form and request to forward to branches. And if there is any dispute, we will go through the dispute resolution department. So there is also opportunity to apply or to apply for appeal for any error or mistake. All right, if error and mistake relief, okay, there is for some reason somehow you claim a wrong relief. So for instance, you have the children is actually above 18 and already in the university, but the parents forgot to tick the one that above 18 going to the university, so the relief would be 8,000. So this is an error made by the taxpayer. What they can do is that they can appeal for to make the correction and to rectify the mistake. Dengan syarat and the conditions are the person has paid tax. So the tax is already paid. It's just that they realize that, oh, this is wrong. We need to deduct more relief. So the person alleged that the assessment is excessive by reason of an error or mistake made by them. And the person apply for relief within 5 years at the end of the year of assessment within which the assessment was made. Okay, so boleh appeal kalau ada salah. What about offence and penalties? Okay, so you can see from this table here, if a person failed to furnish return or give notice of chargeability under a few sections, section 112 in particular, if a taxpayer failed to furnish return, the penalty would be from 200 to 20,000, 6 months imprisonment or both. Failure to furnish return and notice of chargeability, same thing. The penalties would be 300%, which means I don't show you the table here, but you can see from their website and for the penalty. For example, this person failed to furnish the return, so the penalty would be 2,000 or up to 20,000, up to 6 months imprisonment. Not only you have to pay the penalty, you also have to pay the tax. And the penalty can be up to 300% of the tax. Let's say you forgot to pay 3,000 ringgit tax. So the penalty that you have to pay is 3,000 ringgit times 300%. So not only the person has to pay the penalty, they also have to pay whatever tax that they missed to pay earlier. Omitting or understanding or gives incorrect information, right? So special penalty 200%. And they have their own practical rate, the table of practical rate. All right, voluntary disclosure before case is selected for audit. Okay, the person make an offence, lupa nak hantar tax return, tapi dia sedar within 60 days, voluntary, we call it voluntary disclosure before the case is selected, which means the lembaga hasil haven't realised that this person is making a mistake. Tapi orang dah realise they make mistake, so they contacted the IRB, and the period in which, if let's say they contacted within 60 days, within 2 months, so the penalty rate is only for 10%. As you can see here from the table, the longer you wait, the higher the penalty would be. So this is the penalty for voluntary disclosure. If you don't disclose at all, so fail to disclose at all, so the penalty is higher, 300%. But if you remember that, oh, I have some mistakes done or some offences done, and so this is the table. So the lesser time you take, the lower would be the penalty rate. All right, in taxation, we also have what we call as tax audit and investigation. Right, so since this is a self-assessment system, this is something that you yourself have to declare. So you can declare wrongly, or you can be honest and declare whatever that you have. So under this system, IRB have what they call as tax auditing to encourage. This is to encourage voluntary compliance with the law. You know, we have to comply, but it is voluntarily because we have to submit our own tax return. The government does not issue us a return, then we have to pay. No, we have to declare what we have. So when they introduce a tax audit, which are categorized into two, desk audit as well as field audit. So desk audit is normally when they call up the taxpayer, ask for some relevant records or documents to be examined by them in the office. So this is called a desk audit. A field audit is when they actually visit you at your place. But for this field audit, normally they will call up and tell us that, okay, we are coming in 2 weeks' time. So can you prepare all the documents so that we can go there and check? Normally this is done with the companies. They go to the company, go to the office and check all the relevant documents. So this is called field audit. Right, so desk audit is whatever done in their office. Field audit is when they go to the field and when they go to the place, to the taxpayers' office or taxpayers' home. Whereby tax investigation, it involves a surprise element or the rate. They will not inform you beforehand, before they come. So they will check and then they will come and do a surprise check at business premises or home. And they will search of multiple premises of the tax-based activity, the residence and office, dia akan pergi check lah. And normally the tax investigation is done where they receive a report or some element of fraud, default or negligence, which may render criminal in nature. So this is where they will start doing their tax investigation. And the period covered by a tax investigation may exceed the 5 years if there is evidence suggesting fraud, willful default or negligence. So it can go back to 5 years before or 7 or 8 years earlier. All right, so that was basically a bit on the tax planning. So the tax administration. So we talk about the procedure for appeal, the penalties, as well as the responsibilities of the taxpayers. Right, the last part would be the tax planning part. And we already discussed about tax planning in every topic that I actually covered. And so we discussed about tax planning under employment income, tax planning under non-business income, tax planning under partnership, tax planning under estates, trust and settlement, tax planning under business income. So even we have topics on zakat planning, how to plan. So when we talk about zakat and tax planning, so with this self-assessment, you really need the knowledge to compute the tax and all the compliance procedures for as well as the penalties. Right, when we have to do things voluntarily, we need to gather as much information as we can. So as a potential financial planner who actually want to master the tax planning, so you can have some financial resources in a legal and appropriate sense, not only for yourself, but also for the client. And most importantly, the tax planning can only be undertaken when you understand the tax law. So throughout the semester, you've gone through section 4A, business income, up to non-business income under section 4F. So from here, we can see that which are the parts and which are the income that a person can actually plan in order to minimize their income tax. All right, I will introduce you to 3 elements under tax, whereby we have what we call as a tax evasion, tax avoidance, as well as tax planning. Right, the first form of to minimize the tax liability illegally, right, is called tax evasion, which means you run from paying taxes. This is through fraudulent techniques and like deliberate understatement of taxable income or inflating expenses. So you know what happens if you report less income. So if you report less income, so your income tax would be lower, or you have the same amount of income, but you report more expenses. So income, when you deduct more expenses, so your net income would be lower, and that will result in a low tax payable. So it is an unlawful attempt to reduce one's tax burden, and tax evasion is normally done with the motive of showing fewer profits in order to avoid tax burden. So some practices can include making false statements, hiding relevant documents. For example, they have more sales, but they only report half of the sales. Why they report half of the sales? Because they want to pay less taxes, and not maintaining complete records of the transaction, concealment of income, overstatement of tax credit, or presenting personal expenses as business expenses. So as we learn in our business deductions, only business expenses can be deducted under business deduction, not personal expenses. So, but if people wants to reduce their tax liability, sometimes they did some illegal practices. And tax evasion is a crime for which the assessed could be punished under the law. Like the second one is tax avoidance. This is also an act to minimize tax liability, but it is a legal method to do it. What people can do under tax avoidance is they use the tax regime, they use the tax law, but they use it for their own personal benefit to decrease the tax burden. This is actually taking advantage of the shortcomings in the tax rules. Try to find ways to avoid paying tax, but within the limits of the law. Tax evasion tadi, it is illegal lah. They don't follow the law. Tax avoidance, they still follow the law, but they adjust something to avoid paying more tax in the manner that will be no, as you can see here, no violation of tax rule. They don't violate the tax rules, but there are some shortcomings. So tax avoidance is lawful, but in some cases it could be in the category of crime, and we can say that this is an immoral activity. Legal but immoral. And the last one is tax planning. So this is the most safe way to reduce our tax liability. Okay, why? Because it involves planning our income in a legal manner. So whatever we have, whatever knowledge that we have, we can use it in doing the tax planning. So what we can practice is that we know now that there are various advantageous provisions, various various deductions, various credits, various incentives, rebates, reliefs, and also exemptions. So if we know all of these, and we can use this to plan the tax so that the tax paid is actually lower. So we can say that tax planning is an honest approach of applying the provisions which comes to the framework of taxation law. We follow the law, we do it legally, we do it ethically, and we plan. End of the day, the purpose is actually to reduce our income tax paid. So this is a summary of tax evasion, tax avoidance, and tax planning. So you can see from here the nature. For tax evasion, it is illegal, commit a crime when you evade taxes. Tax avoidance, it is legal, but sometimes can be immoral. So the tax planning, legal and morally right. So the motive for tax evasion is to conceal tax. For tax avoidance, to dodge tax. They want to pay, but they want to pay less. So the tax planning, we can say you want to save some amount of tax. So the consequences for tax evasion, it can be penalty or imprisonment. And for tax planning, no negative consequences normally. Okay, so the objective, again, this is tipu lah, to reduce tax liability by exercising unfair means. Tax avoidance to reduce tax liability, but still try to dodge some taxes. And the tax planning, we apply the provision and moral of law. And tax avoidance and tax planning are actually permissible, but if you go back to these attributes, and tax avoidance can sometimes be immoral. All right, so going back to the self-assessment system, where I mentioned to you that the government wants the citizen to disclose or to furnish their tax return voluntarily. But they also come up with some compliance strategies. So number one is to provide assistance for compliance through taxpayer education and support. So as an business-related students like you, you have this advantage over the person without any taxation knowledge, because you know about the tax law, you know about tax planning strategies. And for other people, they also will be a future taxpayer, but they don't have this tax knowledge. So this is really an advantage for you. Reduce opportunities for non-compliance through increased compliance check. So there are a lot of reminders to tell the taxpayers to actually pay their taxes. Provide these incentives for non-compliance through enforcement. This is particularly for business. And deter non-compliance through well-publicized criminal prosecution. So do you know that if you don't pay your taxes or you have taxes due, You cannot go overseas. Sometimes you go to the immigration, you go to the airport, the immigration will stop you. Oh, this person cannot go out from Malaysia. Why? Because they don't pay their taxes, right? So this is to deter the non-compliers, to make sure that everybody pay their taxes. And also IRB has taken some programs to educate the public on the importance of complying with tax law and regulations. All right, this is the most important part that we have learned throughout our 14 weeks for one semester. So the tax planning for individuals, so that we focus more on the individuals. All right, number one is the employee salary package. You also see this in our employment income topic. So the employee salary package means you can negotiate with the employer. All right, remember we talked about we can ask for more or a higher benefit in kind remuneration rather than a cash remuneration, because we know in our calculation, if you have salary, bonus, and whatever allowances, you will be taxed as a whole. But if the remuneration comes in the form of benefit in kind, there will be a table, kan? You ada furniture, car, fuel, apa semua tu. So based on the table. But for cash remuneration, you will be taxed as a whole. But this package can be structured and can be discussed with the employer. Normally, when you are at certain level of employment, when you just join, I don't think you can actually ask for whatever that you want. But you can try. We never know. And then the relief available. We spend one topic with personal relief and rebates. So from here, you can see that there are a lot of relief available. Just a matter of you know how to use it or not. So if you are aware of the reliefs available, so you can enjoy, for example, EPF, the life insurance. And we also learn about deductions, business deductions, for example, capital allowances. Okay, so if a person ada business and they have a business source, they can claim capital allowances. And we also look at how to choose joint or separate assessment. So again, for separate assessment or joint assessment, we can say that if the husband is not working or suffer huge business loss, so then the wife can claim all the relief and always elect for separate assessment unless other spouse have no total income. Because for separate assessment, first of all, we can enjoy the personal relief, the 9,000 relief. So everybody, both parties can enjoy that 9,000 ringgit relief. Otherwise, if you choose separate assessment, the husband would get 9,000, the wife will only get 4,000 ringgit. Right, so in terms of child relief, the husband cannot claim child relief on the same child or once the wife already claimed the child relief. So where there is more than one child, this is where the husband and wife can plan to allocate the number of child relief to be claimed by each person. Bonus and director fees are taxed in the year already received. Also some kind of planning, can plan to okay, what year to receive bonus and director fees, or maybe different year. And donation shared out between husband and wife restricted to 7%. All right, so the implications, the tax implications and the tax planning. So I have here both business income and non-business income. So to enjoy the tax planning or to plan for tax planning under business income, okay, we go to section 4A of the Income Tax Act and look at all the deductible expenses and all the deductions, all the permitted expenses. So remember when we talk about business deductions, for instance, this company hire a disabled employees, dia boleh dapat double deduction. So these are the tax planning that a business can plan. Can also claim for capital allowances and business source losses can be carried forward to the next period. Right, for non-business income, section 4B until 4F, So this is actually basically what we learned so far, section 4A until 4F. So we can plan based on the different types of income. So under 4B until 4F, also there are deductible of expenses, include direct expenses and the permitted expenses. But for non-business income, we cannot claim capital allowance. And non-business source losses cannot be carried forward to the next period. Only business source losses can be carried forward to the next period. All right, so this is tax planning for companies. For individual, we saw it just now, especially about the relief and also the joint and separate assessment. For companies, how do they plan for their tax? number one, if they have tax losses or they have business loss. And capital allowances, and they can enjoy deductions in terms of capital allowance. Investment incentives, bad debts, allowable versus non-allowable expenses. So all of these can be found under section 4A, business income and business deductions. Okay, I have here 5 summary of rules especially for business. All right, so for adjusted business profit, number one, to always utilize capital allowance first, then loss brought forward. If there is loss brought forward, they should utilize capital allowance first. Jangan letak loss dekat atas, capital allowance later. Letak capital allowance dulu dekat atas. For non-business income, if let's say the company has rental income, it must be added to the business income to derive at aggregate income. And other source and non-business source cannot offset capital allowance because of different source. Unabsorbed business loss brought forward can only be deducted from business source. Unabsorbed business loss boleh tolak from business source, cannot be deducted from any other source of income. Likewise, non-business loss cannot be deducted from business income. And current year adjusted business loss can be set off against income from all source. Current year, nampak? Gross yang brought forward, business loss brought forward can be deducted only from business source. Tapi current year business loss can be offset against income from all source. Right, let's look at the first example here for adjusted business profit. Always utilize capital allowance first, then loss brought forward. So let's say this business has adjusted business income of 40,000, capital allowance of 20,000, and unabsorbed business loss brought forward 30,000. Right, so this is what we should do. Remember, I said deduct the capital allowance first. So capital allowance duduk dekat atas sini. Business income, deduct capital allowance, so we get statutory income from business. Then deduct the business loss brought forward, 30,000. So kita dapat business loss carry forward, 10,000. You see, we reduce our business loss brought forward, so tinggal 10,000. If let's say there is no statutory income from rental, negative kan dekat sini? So you will not have any aggregate income and the tax payable would be none. So imagine if you tak tolak this capital allowance, so you still have to pay tax because the balance nanti 10,000 positive. So now 10,000 negative. So aggregate income nil lah, no income tax payable. Alright, note 2, based on table tadi, note 2, non-business income must be added to the business income to derive at aggregate income. But other source cannot offset capital allowance because of different source. Okay, let's see. In this example, we have business income 40,000 and rental income 10,000. This example tadi tak ada rental income, cuma ada business income. So here we have business income and rental income and capital allowance of 20,000. Alright, see again how we can do this. Okay, we just take the business income 40,000. We deduct the capital allowance first. So we have statutory income from business 20,000. Add our rental income 10,000. So our aggregate income 30,000 and the tax will be paid on the 30,000. Because we cannot put income up here, we have to separate because the capital allowance is only deducted under business income, not under rental income. Okay, what if this company have unabsorbed business loss brought forward 10,000 and the statutory rental income is 6,000? Again, deduct the capital allowance first. So here, deduct the capital allowance, you have nil, statutory income from business, and we less our business loss brought forward, so jadi negative 10,000. And here we have rental income 6,000. So dia habis dekat sini lah because this is non-business income, so 6,000. So the tax will be paid only on the 6,000. Alright, so you can go through the rest of the example 4 and example 5. And these are the self-assessment questions, number 1, 2, 3. So number 1, under the self-assessment system, companies must file their tax return within how many months of the financial year end? And you can find the answer in the previous slides. The due date for payment of monthly tax installment for a company, limited liability partnership, trust body, or cooperative society under the self-assessment system is, right, first of each month, 15, 30, or none of the above, right? Or say is in the notes. And number 3, what is tax planning? Is it the art of dodging tax without breaking the law, or management of finances for payment of tax, assessing the advanced tax liability to pay tax in time, concealment of income, or structuring tax affairs lawfully to give rise to minimum tax liability? All right, number 4, tax avoidance means, okay, same answer, 3, 4, 5, but you have to choose which one is the answer for tax planning, tax avoidance, as well as tax evasion. Okay, basically that's the end of tax administration and tax planning topic. So please sign in your attendance for today's class. And I hope you finish watching the video and subscribe to the channel so that you can watch videos for other topics as well. All right, so thank you very much.